Hello, and welcome to the Commonwealth Financial Network June Market Update. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. It was a good month for U.S. markets. All three major indices closed up. We had a bit of a pullback at the start of the month. Indices were down between 1% and 2%, but improving economic news at month's end drove the markets back to a gain. We didn't actually see that in international markets. We saw the pullback, but we didn't see as much of a rally, and the reason behind that is interesting. Because the economics are getting better across the board, but politics remain a risk. Let's start with the U.S. The worry at the start of the month was we had had a tough first quarter. We had had some really mixed data. People were worried. Investors were saying, are we really going to see things get better going forward? But then the data started to break. While we still have some concerns in manufacturing and in durable goods, the bulk of the economy, over 2/3, is actually consumer spending. We got news that consumers are going to be able to spend. Job growth continues to be strong. Wage growth is actually accelerating. In other words, people are making more money and they're making it at a faster rate than they were. And even though consumers have been able to spend for a while, they haven't been willing to spend. And now there are indications that consumers are starting to step up. The housing market continues to do very well. New home sales were up by 16%. That's huge. When you buy a new home, you buy lots of other stuff. It indicates confidence. It says, yes, the U.S. economy, at least 2/3 of it, is starting to accelerate. Even the Fed got on board. This is a notably nervous, scared Fed. They've been very unwilling to ratify any kind of recovery, but in the most recent set of minutes, they actually said we're essentially at full employment. In other words, the labor market is healed. That's big. They also say inflation, the other part of their mandate, is moving on the right track, and they're getting ready to raise rates. You may not think that's good news, but actually it is. For the Fed to say that the economy has normalized, that the healing has gotten to the point where we can raise rates, that is the most important endorsement we can ask for. And it suggests that even the most skeptical observers now expect the recovery to continue and accelerate. Are there risks out there? Of course there are. We talked about politics with Europe. We've got a big political risk event coming up, a British referendum on exit from the European Union. You could ask, why does that matter to us here in the U.S.? And the truth is, it doesn't much, but it could rattle markets, and we need to be aware of that. We also need to be aware of the turbulence that could come around the Fed raising rates. Both of those are events that could rattle markets, but the point here is that the fundamentals remain solid. Even for companies as a whole, we've seen earnings come down, but the future is much better than it was. In fact, expectations are being adjusted upward. The question for the markets is not what happened yesterday, it's what do we expect to happen tomorrow. We have good reason to believe that things will actually continue to get better. Will they? We'll have to wait and see, but at the same time, spring finally appears to be showing up here in Massachusetts and in the markets as well. Thank you for tuning in, and I'll talk to you next month.